All right, good morning, Checkmate crew. It's 30 minutes after the opening bell of New York Stock Exchange, 10 a.m. Eastern Time on this Thursday, February 2nd, 2023. Yours truly, Mickey Blindside here with your market memo. Okay, guys, today's the day after FOMC. As always, we see a little bit of a market reaction. Sometimes the quote-unquote real move may not happen until a couple of days later, even until Monday of next week. So we shall see where the market wants to go. Initially, though, the market did pop up on expectations. I mean, we were kind of overhedged, and we were talking about the VIX 9-day and how there was a lot of short-term hedging. VIX 9-day. There we go. The VIX 9-day, it is dropping. It is kind of coming up from the initial open. But we saw that the premiums on that short-term volatility were kind of high. It popped up kind of last week into the right after OpX. We saw that the VIX 9-day really popped up in comparison to the VIX 30-day. And it was elevated, and we saw a big movement, especially in the short-term hedging. I think we were over-hedged, especially on the short term, and now we're seeing premiums come down, especially relative to the VIX 30-day. We'll see if that continues or not. Yesterday, we saw tech just pop because of this. The initial reaction was bullish, but, again, it could all reverse by Monday. So, it's not a bad idea to be patient from now until next week. A lot of people I know are not going to be opening up new positions until next week just to see where the dust settles, okay? Let's take a look at the CME Fed funds probabilities. I do think that, let's see here. I don't think there's going to be big differences, but I just want to check. So it looks like in the March meeting, the market is still expecting a 25 basis point rate hike for March. For May, looks like we're going to sustain that 475-500 zone for the Fed funds rate. And we are still looking at a possibility of a rate cut in around November, okay? So the 450, 475 current, actually the percentages went up. So the odds of it are going up right now of a rate cut in November or December, okay? Despite what you may have heard on the media about, people's interpretation of Jerome Powell's speech, okay? Those are just interpretations, okay? Those are people's squawking heads' opinions. I don't care about the opinions. What I care about is what is the bond market expecting? How is the bond market positioned? Right now, the bond market is positioned for a rate cut, okay? In actuality, the yield inversion trade is actually further inverting, which is kind of interesting. So we're seeing more people pile on into that yield inversion trade. And so for some of you that are new, we've had a couple of new members join us. The yield inversion trade is basically market participants going long on the longer end of the Treasury maturity curve. So the 10, 20-year Treasury maturities, they're buying those and they're shorting the shorter dated maturities, which are like the 1 year and the 2 year, okay? So in essence, that bet is that we're going to see a recession soon, and then Jerome Powell is going to come in, save the day, and start cutting interest rates. That's the bet. Okay, that's the position. And right now, it's a super crowded position. I believe, as I've stated for many weeks now, that trade is going to blow up in people's faces. Okay, and when that happens, I think it's going to happen around March, April. So when that does happen, I think we're going to see a lot of opportunities. We're probably going to see a big pullback in the market, especially in tech stocks, because as that yield inversion trade unwinds, the 10-year Treasury bonds will have to get sold off because, the yield inversion trade is basically buying the 10, 20-year, the longer end of the yield spectrum, and then the shorter end, which is the 1, 2 year, that's what they're shorting. So if there's an unwind of that trade, they're going to have to buy the shorter end of the yield maturity curve and then sell those 10, 20-year Treasury bonds. So When that happens, we're going to see the TNX, the 10-year Treasury yield spike, and that will probably compress valuations and probably will be a pullback and otherwise a mini bull market, which we've been calling for since actually summer and fall of 2022. The data was already turning by then, and we already saw that coming. Now, if you actually go on social media, everybody's bullish now after this. But, of course, retail is just one step too slow. And we've been anticipating this for a while. So in the end, data wins. So right now that yield inversion trade is still getting even more crowded. It'll be a glorious unwind in my opinion. But that is what I'm seeing right now. ZF, I think this is a very important indicator going forward. ZF, if we see ZF going up, I think, we might see, we could see, even more of a, we could see more buying of equities and risk on if we see the ZF keep going up like this. We will see if it ends up turning down and actually making new lows. That would invalidate ZF and its signal basically for risk on. Okay, so I think I'm going to keep an eye on this, but big levels are what's important here, not the day-to-day, but it's the big levels. Okay. Next, Meta. A lot of tech stocks are having their earnings this week. Meta just had their earnings, and boy, did that, woof. I mean, that was one heck of a move. It's up 20%, gapped up 20%. I remember back here when it was around $100, okay, people were saying that they were going to short around here, and I said, well, that may not be a good idea. You may want to wait until we get into at least the 150 zone, 155 zone. I remember a lot of people were laughing at me for this. Who's laughing now? Okay, so this is what happens in a low liquidity market. The counter trend movement or the trend reversal can rip your face apart. Okay, and this is why I've been pounding my fist on the table for patience. Use the data in your advantage before you place a trade. Those of you, we already saw back then that the data was improving, the internal data, their junk bonds advanced decline line, the New York high-low line, the New York advanced decline line, the NIAD, and also the S&P 500 equal weighted index. Remember, we saw the data turning. It wasn't necessarily good like as it is now, but it was stabilizing. And I said, hey, it's stabilizing, and if it turns, we could see stocks, rip some faces, and we could see a significant rally. Hopefully, some of you heeded. I know some of you went against it and bought some puts, and you guys are, that's probably a very, very painful lesson. But nonetheless, this is why we use the data, because stories and opinions are often wrong, but the market is rarely wrong, and the data itself is rarely wrong. I mean, is it 100%? No, of course not. Nothing is 100%. But again, more often than not, the data usually tells us which way the risk reward or the reward to risk is in our favor. Okay, it will tell us which direction is better for the reward to risk. All right, and back then I said, hey, watch out, we could see a rally. Now we're at 182. Okay, so 80%. People were saying, oh, 50% in in the next couple of weeks, that's impossible. Well, we're at 80, so nothing is impossible. Everything is within a realm of possibilities. Okay, you always have to remember there's no absolutes in this market. It's all a realm of possibilities. Now, this is very interesting. Now, Meta, I think, about a few months ago, I said that Meta was on track to become a mid-cap stock, and that was under the assumption that they would keep increasing their costs. Meta, in this round of earnings, they actually cut their cost estimates for 2023. So it looks like they're doing some cost cutting. All right, it looks like they're doing some cost cutting, and right now there's some rumors that Meta might spin out their metaverse segment of the business away from the social media side, and also too they announced that they're going to increase their share buyback program, and that just sent the stock way up. So If that is true, if they are cutting costs and if they're being more mindful about their spending, then in that case, Meta could grow. Okay, the Meta in that case might be saved. So perhaps there is a strategic shift within Meta, and if that's the case, then we might see Meta actually come back and have some fair valuations. Now, if they ever go back to that metaverse and they start increasing their costs again, we might see it coming down. So, you know, for those of you invested in Meta, you probably want to be following their earnings very, very closely because I do think that based on that, we're going to see valuations and what fair value is change. So we have Meta, we've got other stocks, I think, too. I think Apple is going to release earnings soon. When is Apple's earnings, actually? It is, it's after the market today. So we got Apple later today, okay? I think Amazon is also, is it after today as well, too? Yeah, I think it is. Yes, it is. It's after today. So we have Apple, Amazon, and then, of course, Google as well, too. So we've got the three biggest tech companies about to release earnings after the closing bell today. So tomorrow should be a very interesting day, to say the least. Okay, let's see what happens tomorrow. All right. Next on my list is I want to also talk about crypto as well too. You know, we've been covering more and more about the crypto activity. So crypto, as you know, as expected, you know, they are going up as well. I mean, it was crazy yesterday. Yesterday, actually, the intraday action on crypto was crazy. We saw like a big, right initially after the FOMC announcement, crypto went down and then it just popped up like crazy. So this is kind of interesting. We're also seeing some options activity, which I wanted to share with you guys. Let's actually take a look at the OI. I'm not really sure. I didn't really check the OI yet. Let's see. Okay, give me a second here, guys. So yeah, so let's take a look at some of the block trades here. So the block trades are increasing. I mean, we're seeing now a more frequency of big block trades in Bitcoin, especially. Okay, so as we can see here, we're seeing a lot of spreads. Actually, these look like credit spread. This looks like a credit spread right here. So that's a bullish spread for September 2023. That's in the money, and somebody is expecting this to come down, and they're shorting volatility with it. So that's in for September. So I think there is, you know, that, you know, it kind of goes with our thesis too. So whoever is doing this, I think, is agreeing with our thesis that there's probably going to be some type of you know, end of year, perhaps, you know, the bull market, or this rolling bull market, if you believe a rolling bull market's going to happen from now until September or so, it's probably going to end around end of 2023. That's what I believe too. So whoever, maybe this is one of our Checkmate crew members. I'm just kidding, you know, probably not, but you know, who knows, right? And then we're seeing some more spreads here. What is this? 3-leg spread right here for June 24, 21. That looks like that is interesting. 21,000 calls. It's right here. This is the spread, and this. So this is also a buy sell. This is a call credit spread for June. So we're seeing, you know, these spreads come up. Again, the frequency of these block trades are going up. We still have a little bit of a forward skew. I wonder if there's anything going on with ETH. Any block trades for ETH. We haven't really seen that many big block trades for ETH. I don't know why. I don't know if they're... we're actually... Whoa, look at that. Look at that. We're seeing now bigger block trades. Look at that. ETH getting some big block trade participation now. We're getting into the 6-figure range now in ETH. So it's interesting. Very interesting indeed. Okay? So we're starting to see that. All right? Let's see what kind of spreads these are. These are call credit spreads. Call credit spreads. So we're seeing call credit spreads being sold on Bitcoin and on Ethereum. Okay, whether it's some profit, it could be profit taking. It doesn't have to be, actually, now that I mention it, it doesn't have to be call credit spreads. They could be just profit taking. Let me actually see if I can find the OIs. I thought I had it saved already, but it looks like perhaps not. Let's see. So yeah, so it looks like, so it could be them doing some profit taking. I'm not sure. Let's actually take a look at the OIs and see. The OI now is at 5. Let's look at the national total money value. It is coming up, so we're at 5 now. And what about for Bitcoin? I remember it was like 6.7. Okay, so it's increasing. So the OI increasing, I mean, that to me suggests that these are opened call credit spreads. If it's opening, I mean, it may not be, but I think it's probably more reasonable for it to be a call credit spread. Calls bought, calls sold. So yeah, there's more. Actually, there were more calls bought than sold. So especially on block trades, more bought than sold. So it could be that those were just closed options, but I don't think so. Hold on, call spreads. Yeah, there's a lot of call spreads. So, it could be opening. I do think with the OI opening increasing, it's probably more likely that was an opening trade. Okay, so we've got potential some credit spreads being sold on the call side. So it's mildly bearish positioning, increasing. So we'll see what happens. Okay, but those are kind of longer dated. They're in June and in September. We shall see what happens with that. Okay. Any questions? Any requests that you guys want to see? So that is all I had planned for today. Hopefully next week we'll have more to discuss. I just want the dust to settle after this FOMC and this earnings week. It's really hard to open new positions or talk about new positions when I know that there's going to be some excess volatility coming at the end of the week. So next week, hopefully, and over the weekend, I'll be able to find some more opportunities, and I'll report that to you guys as always. Okay, so in that case, we'll go ahead and wrap up the morning session of the market memo. Our Discord invitation link is in the description below. Come join our Discord. Be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment. Show us some love, baby. All right, I'm going to be back next week. Same time, 10 a.m. Eastern time, 30 minutes after the opening bell of New York Stock Exchange, Tuesday, Wednesday, Thursday. Hope to see you guys then. Have a great weekend. Trade safe.